Welcome to Investify, where we delve deep into the dynamic world of tech stocks and uncover the hidden gems of the market. Today's episode is all about the seismic shift in the tech landscape as we head into 2024. Gone are the days when tech giants like Nvidia, Adobe, and Apple were the sole focus of investors. Now, it's time to spotlight the rising stars in the tech sector, where innovation meets investment opportunities. And trust me, for the savvy retail investor, this is the perfect time to dive in. Let's kick things off with a deep dive into a company that's been making waves in the mobile advertising realm, leveraging the power of AI, App Lovin Corporation. Their performance in the third quarter of 2023 was nothing short of spectacular. Here's the lowdown. App Lovin reported an EPS of 30 cents, shattering expectations with an impressive 11.2% beat. But that's just the tip of the iceberg. Their revenue soared to a whopping $864.26 million, marking a significant 21.2% year-over-year increase. And what's driving this surge? It's their flagship product, Axon 2.0, an AI-powered advertising engine that's revolutionizing the way mobile ads are delivered. This innovation has propelled their software platform revenue to an eye-popping $504 million, showing a staggering 65% increase compared to last year. The app's business is not far behind, with a healthy 5% sequential growth, bringing in $360 million. The financial prowess of App Lovin doesn't stop there. The net cash generated from operating activities reached a solid $199 million, with free cash flow trailing close at $194 million. And here's a bold move that signals their confidence in the future. In 2023, App Lovin initiated a massive $1.2 billion stock buyback, showcasing their commitment to enhancing shareholder value. Looking ahead, the company has set its sights even higher. For the fourth quarter of 2023, they're projecting revenue to be between $910 to $930 million, with an adjusted EBITDA margin hovering around 46 to 47%. These figures aren't just numbers, they're a testament to App Lovin's relentless pursuit of growth and innovation in the tech sector. Continuing our journey into the fascinating world of tech stocks, let's turn our focus to a company that's been undervalued, yet holds incredible potential. Limbach Holdings. When we talk about undervalued stocks, Limbach is a textbook example, and the numbers speak for themselves. Let's break it down. The fair value of Limbach Holdings is projected at a robust $68.7. However, the current share price stands at $40.25, suggesting that the market might be underestimating its true value by a substantial 42%. This discrepancy highlights a golden opportunity for investors looking for hidden value in the market. But how do we arrive at these numbers? Limbach Holdings employs a sophisticated two-stage free cash flow to equity model. This model takes a deep dive into the company's financials, projecting future cash flows, and then discounting them to their present value. The result? A comprehensive understanding of the company's intrinsic worth. Here's a more detailed look at the valuation. The present value of Limbach's 10-year cash flow forecast is estimated at around $286 million. But wait, there's more. The terminal value, which accounts for all future cash flows beyond this initial decade, stands at a staggering $967 million. When discounted to its present value, this amounts to $473 million. Add these figures together, and you get a total equity value of $759 million for Limbach Holdings. But what does this mean for the investor? When we divide this equity value by the number of shares outstanding, we find an intrinsic value that starkly contrasts with the current share price. Specifically, the intrinsic value per share is approximately $40.3, reiterating that 42% undervaluation. It's important to note that these calculations are based on a discount rate of 7.4%, which is crucial in determining the present value of future cash flows. Before we dive into our next exciting stock, if you're finding this video insightful and want to stay updated on the most promising tech stocks for 2024, don't forget to hit that subscribe button. Your support helps us bring more of these deep analyses to you. Now, let's shift gears and zoom into another tech powerhouse that's been redefining the landscape. Celestica. This company is not just a player in the tech world. It's a master craftsman, focusing on design, manufacturing, and supply chain solutions across various cutting-edge industries. Celestica's performance in Q3 of 2023 was nothing short of a blockbuster. Their revenue hit a monumental $2.4 billion, surpassing expectations and setting a new benchmark in their financial trajectory. But what's driving this incredible success? It's a combination of growth across their diverse segments. The Advanced Technology Solutions, or ATS, segment saw a robust 12% growth. Not to be outdone, the Connectivity and Cloud Solutions, or CCS, segment also contributed with a solid 2% growth. But Celestica's financial acumen doesn't stop at revenue. Their non-IFRS operating margin witnessed an uptick of 60 basis points, showcasing their efficiency and profitability. This isn't just growth. It's growth with a keen eye on maintaining healthy margins, a crucial factor for sustained success. As we look towards the future, Celestica's projections for Q4 of 2023 are equally promising. They're expecting revenue to range between $2 billion to $2.15 billion. And here's a figure that'll catch your attention. Their non-IFRS adjusted EPS is projected to be between 65 to 71 cents. To put that into perspective, that's an anticipated 23% growth from the previous year. These numbers aren't just impressive. They're a testament to Celestica's consistent execution and strategic foresight. Speaking of strategy, Celestica is not just playing the game, they're ahead of it. Their strategic initiatives in artificial intelligence and data center infrastructure are not just about keeping pace with the tech world. They're about setting the pace, leading the charge into a future where data is king. As we round up our exploration of the tech stock landscape for 2024, let's take a closer look at Yalla Group, a company that's rewriting its story with a strategic pivot that's paying off big time. Post their 2020 IPO, Yalla made a significant shift, moving from voice-based functions to focusing on the lucrative world of gaming. And let me tell you, this move has propelled them to new heights. Yalla's gaming revenue in the third quarter of 2023 soared by an impressive 31%. But that's not all. They also saw a 7% increase in average spending per user, a clear indicator of their successful engagement strategies and the high value they deliver to their users. This is a company that understands the pulse of the market and adapts swiftly to meet evolving demands. When it comes to stock performance, Yalla is a shining star. Their stock is hovering near a 2-year high, having surged by an incredible 70% over the year. This kind of performance is not just noteworthy. It's a clear signal of investor confidence in the company's direction and potential. Diving into the numbers, Yalla's revenue for Q3 stood at $85.2 million, marking a 6.4% increase from the previous year. But here's where it gets even more interesting. Their net profit for the quarter was a whopping $35.2 million, a robust 44% increase year-on-year, with a net margin of 41.4%. These figures don't just reflect growth. They underscore a deep-rooted financial discipline and a strategic acumen that's rare in the fast-paced tech world. Yalla isn't just sitting on their laurels. With cash reserves of $545 million, they're well-positioned to navigate the high-interest rate environment and invest in future growth. Looking forward, Yalla is setting its sights on expanding into animation and integrating offline services online, demonstrating their commitment to innovation and staying ahead of the curve. As we wrap up today's episode, remember, the tech stock landscape is ever evolving, and 2024 is shaping up to be a year of exciting opportunities and significant shifts. If you found this video informative and want to keep up with the latest in tech investments, make sure to hit that like button, subscribe to Investify, and turn on notifications for more insightful content like this. Your engagement helps us keep bringing you the best investment insights. Thank you for watching, and until next time, keep your investments smart and your portfolio strong.